Welcome back to another week of Stocks in Review for the upcoming week. In this special edition, we're going to look at everything we normally do with one added bonus. At the end of my stock reviews for next week, we're going to look at some of the top recent holdings of Warren Buffett and see how he's done year to date, and I'll share the details of those stocks with you. This was quite a week for earnings. Lots of impressive results from big names such as Facebook, Advanced Micro Devices, PayPal, AT&T, McDonald's, and Boeing to name a few. I recommend Boeing and AMD last week and things turned out pretty well for them. Boeing blew the roof off with a closing price of 10% higher than when it closed the day before, a remarkable $21 increase. Boeing has an impressive free cash flow of $4.5 billion. The market also liked that the Fed left rates unchanged as expected, with minor adjustments made to the inflation estimates. Again, no surprises. Oil rose again this week, trading near 2-month highs as it was reported that there was a drop in U.S. stockpiles. With the various geopolitical flashpoints around the Middle East, Asia, and Russia, analysts are saying that crude prices could easily surpass the $50 per barrel price and possibly the mid-50s. Other than John McCain showing up to denounce the latest healthcare bill, which turned out to be a big flop, there wasn't much progress made on anything in Washington as of early Thursday morning. U.S. existing home sales fell more than expected in June, and it all had to do with a shortage of inventory. Median home prices jumped 6.5% from just 1 year ago and is now at $263,800. The 64th straight month of price increases. In cryptocurrency news this week, regulators approved that digital currency investors could obtain and hedge Bitcoin and Ethereum using exchange-traded and centrally cleared options contracts in the Ledger X venue. Most likely, you'll first see 1 to 6 month options for Bitcoin, then other digital currencies will follow. This is big news for longer-term owners of the top 2 digital currencies, because soon you'll be able to hedge your position and buy a little insurance against major downturns. You can bet that more people will jump on the bandwagon and start downloading Coinbase and all the other apps in order to try their hand at making a profit. Since there's only a definitive amount of the top cryptocurrencies that's even supposed to ever exist, if you increase demand and keep supply limited, well, you know what happens then. I opened up a position on some Ethereum earlier this week. I bought at the lowest price that I could after watching it for a number of days, and of course, it went a bit lower shortly after I made my purchase. But as of Thursday, I was about even. You might be surprised to hear this, but there's actually more than 900 cryptocurrencies available worldwide as of this month. The top 4 in order of market capitalization is Bitcoin, Ethereum, Ripple, and Litecoin. On watch this week, I have Northern Dynasty Minerals, Apricus Biosciences, and Synergy Pharmaceuticals. Gold and copper have been moving up this week, and futures look promising as well. That's usually a good thing for mining stocks. NAK has been basically in the low $1.30 to mid $1.40 range for the last 30 days. Volume has been respectable each week, and there's been some bullish trends noted in the last 5 to 7 trading days. Metals are also rallying. As of 2 weeks ago, according to the most recent SEC filings, there are 77 institutional investors holding the stock. I featured Apricus earlier in the year, and since Wednesday it's been on a real tear. I think you're going to see more upside at the beginning of the week before it levels off. Then there's Synergy Pharma. On May 30th, this stock was at $3.39 a share. It hit a high of $4.74 on June 23rd, and it's been trading in a daily range of about 15 cents from its low to high. Unfortunately, for the last 30 days, the stock has been trending down. So does Synergy need to take some of its own constipation medicine? Well, as of this week, the data shows 9 bullish moves to 1 bearish trend. After looking carefully at several charts, it looks like the MACD indicator lines are moving away from each other, which means that the momentum is increasing and the trend is getting stronger. The question is, will it continue lower or make a turn up? I think especially heading into earnings in mid-August, and with analysts expecting Ironwood Pharmaceuticals, their established competitor, who's going to report lower numbers, that could give Synergy a bump next week. Ironwood was also downgraded last week by JP Morgan from overweight to neutral. The first stock I'm going to look at for the week is Valeant Pharmaceuticals International, ticker symbol VRX. Although this Canadian pharmaceutical company has a controversial past, they have sold off a lot of their assets. They've also reduced debt significantly, and they did a major restructuring. They are also forecast to return to profitability this year. In early May, the stock was priced in the high single digits and has doubled in 2 months. I see more upside here even if you land up holding it through the end of the year. The next stock I'm suggesting to you for the coming week is JetBlue, ticker symbol JBLU. This New York regional airline has nearly 17,000 full-time employees and on Tuesday reported very good second quarter earnings. There was an impressive 12% year-over-year increase in revenues. Earnings per share surged 21% and beat analyst estimates by a respectable 7 cents. The Mint Premium service routes that they introduced 3 years ago have been a real hit, and profit margins are hitting near 20% compared to the rest of the network. The stock has given up some of its recent gains, so I think this coming week will provide a good entry point for you. There was also some recent large institutional buys, a bit over $22 per share. So I'd say anything under or close to the $21.85 a share or less number is a great entry point. I was also nervous about suggesting Advanced Micro Devices again, ticker symbol AMD, because of their blowout earnings earlier this week. I should have put them on watch. But let's just say, if you can get in under the $13.20 to $13.45 a share price, you should be able to scalp a quick profit for the week. There's also a lot of short-term upside with the cryptocurrency mining because of AMD's reputation for producing graphic cards that fit the bill for miners. It'll be interesting to see how much market share AMD can take away from Intel with the EPYC chips. Time will tell. I'm still not super long on AMD, but even if you hold it for a month or more, I think it'll break current resistance levels and you'll be fine. And before I talk about the final stock for the week, I just want to mention to you why I don't often hold through earnings. Look at what happened to Amazon on Thursday after the close. An incredible company, a household name. Their revenue exceeded estimates by $750 million, that's billion with a B. But its earnings per share came in almost $1 less than analysts expected. So the stock got hammered, dropping $32 a share in after hours. I do think, however, that after the dust settles, there's going to be some good buying opportunities for you before it hits $1,100 in probably 2 to 3 weeks at the most. The last stock I'm going to look at is Callaway Golf Company, ticker symbol ELY. They report earnings next Friday, and it's expected that they will again beat expectations. I would only recommend this as a swing trade for next week, definitely not long term. The chart looks bullish and trends have looked more promising recently compared to June. So with volume, great things can happen here. Now, I'd like to take a look at Warren Buffett, a name that's synonymous with super investor extraordinaire. He was born in Nebraska in 1930 and demonstrated keen business skills at an early age. He now oversees a conglomerate that's made up of holdings that encompass insurance, media, food, and energy, to name a few. I'm going to look at his top 10 holdings as a percentage of his portfolio and see how he's done so far this year. It might surprise you, but out of the 10, 6 are worth less than they were at the beginning of the year. Keep in mind, he likely paid less many years ago because he's held them a long time. But this will at least give you an idea of what an iconic investor thinks is a good investment for the long term. This concludes our presentation for the week. As always, investing in the stock market carries risk. Don't invest more than you can afford to lose or not have access to for an extended period of time. Have a great week, and we really appreciate if you could like this video and click subscribe.